Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. The most recent event that created a significant pattern was the combined bearish dark cloud cover pattern and bearish double made in the middle of March. On its own, it was not that significant, but it did allow the creation of an upper trend line for a smaller ascending narrowing wedge pattern. The lower trend line for this pattern was created just after. The upper trend line is a multiple pointer, whilst the lower trend line was only a 2-pointer. 5 weeks ago, for the changeover, prices gapped down below the lower trend line, allowed for some targets to be drawn on the downside. A primary target X would be in the 756.5 area, which was at that time a big ask on the downside, even given some of the recent large ranges. However, there have been, as I've repeatedly said since my annual review on Paris rapeseed back at the very start of January this year, there have been some big patterns in operation here, and a big ask may well be in order. Thus, and I quote from the start of 2022, this leads to my final points. Since May last year, that is May 2021, we have formed a newer, much more acute bull channel. That's currently 663 even to 880 3/4. To me, it is super acute and thus unsustainable, but it is there, and I will not dismiss it just because of its acuteness. End of quote. Well, what I initially saw as a super acute bull channel is still there, and I've transferred it and finessed it on this daily chart, such that I see it now more as the February to April 2021 to date larger ascending broadening wedge pattern rather than a bull channel. This pattern is the outlying, corralling, bullish influence on this market despite what may be happening on a daily and even weekly basis. This pattern has been showing the way higher all the time. However, we did have a move up and over the upper trend line during April, even trading a full week above it and outside it. But, and this is an important but this was a monthly, is a monthly pattern, and we are talking here about, and though we have had monthly close for April above and outside it, looking at the relative limited size of action seen outside the ascending broadening wedge pattern, I've been inclined to look for further confirmation of this bullish intent, which in May was not forthcoming. You see, though we have had a push up over the upper time, the market has not sustained the move higher, and we have made 3 weeks ago a very, very significant weekly key reversal down to counter this bullishness. Since then, we have seen the follow-on lower. I earlier drew a small late April, middle May bearish shift pitchfork. The middle time, currently 793 1/4, has been excellent, showing the bearish angle of attack since its inception. Thus, we have been moving lower towards target X in the 757 even area. However, please be aware, sneaking up from below is the medium moving average, currently 759 1/4, and that is just above target X. And also the 50% Fibonacci line for 2022 at 745.5, which is just below. Hence, it would not be unreasonable to see a cautious approach lower as we near these supports. Winnipeg canola. The recent move higher here peaked in late April with a 3-day bearish evening star pattern based around the 100% projected fib, was then 1193.10. This caused a dramatic drop at the start of the following week, which we're seeing even now. Prices gapped down lower after changeover 4 weekends ago. The next drop down through the significant February high at 1092.20, as well as a slowly rising medium moving average 1083 3/4. Wow, probably 1083.70, I'd probably say that rather than 3/4. And entered a fairly freeze territory below until the wide band of congestion between October 21 and February 22. That's 942.5 to 1030 even. This is not an easily defined area, and it has some various different strata of support and resistances all the way through. Perhaps most immediately recognizable is the rising long moving average, currently 1015 even, 1015.80. Last week and this week, prices have tried to go down to the long moving average, but have as yet not been able to. This is perhaps not surprising. Do you see hesitation within this area, bounded topside by the medium moving average and below by the wide congestion band with the long moving average within it? This leads me to my final two observations. I originally drew an acute bearish Andrews pitchfork with a late April, mid-May move, and it has worked until yesterday. Yesterday we had our first close above and outside it. Now normally I would therefore consider to retire such a pattern. However, I've kept it on for a specific reason, and that is to draw a bearish shift pitchfork from it for the same period. This is the less acute pitchfork on my daily chart. However, you may say there's a problem with this. Well, there is a problem with this, as the market is and has been outside of the bearish shift pitchfork for quite some time. And I would agree with you. But I'm not using this pitchfork in the traditional sense. Instead, I'm using the lower time, currently 1061.5, as a proxy for a downtrend. That's been in operation since mid-May. It also gives me the chance to see how the rising long moving average is getting closer each day to the declining lower time. And there is a chance, I suspect, that we may have a clash when these cross over in about 2-3 weeks' time. Bursa Malaysia crude palm oil. The September to December 2021 bullish Andrews pitchfork had until the end of February been the most recent driver in moving the market higher. It had nevertheless been breached, if not completely broken, over late February and early March. But the market repaired the break by mid-March, and prices continue to move higher in between the lower time, currently 67.07, and the middle time, currently 74.96. In late April, prices pushed up over the middle time and towards the upper time, currently at 82.85. However, that petered out over the start and middle of May, and the gapping moved lower due to the changeover called prices below the lower time, but interestingly not below the rising and parallel medium moving average, currently at 63.38. It is this medium moving average that caused the move back up in late May over the lower time. But this move up was not sustained, and prices continued to test the lower time last week and the beginning of this week. Then last night, for bearish opening Black Mariposa, prices tried to push lower again, but once again they balked at testing the rising medium moving average that is below. Now, as I've said for weeks now, and I quote, over all of this, please remember that we still have the bullish Andrews pitchfork still controlling this market. And unless this is broken, and I mean properly broken, on the downside, then this pitchfork will still show the bullish incentive, which is still endemic in this market. End of quote. And that is still true, but there is only so much pounding that the downside can take before it gives way. So with that in mind, please pay special attention to a possible cusp coming up next week. The rising medium moving average meets the late April downtrend, currently at 66.96. This may not be the event that we should be looking for, but it certainly is a risk inflection in the market. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.